Potential changes in tax and trade policy following the election in November could mean more challenges for retailers. Joining us now is UBS retail analyst Michael Lasser, who just put out a new note on the sector and the impact of potential changes in tariffs and taxes. Michael, great to have you with us. And of course, there are a lot of unknowns, so it's very difficult to sort of outline the exact impact. But you could, when you take a look at this, think about lower corporate taxes and higher tariffs at the minimum. And so what have you found in terms of who can weather that scenario best?
So let's put some frame of reference around this, Melissa. Number one, there's about $3 trillion of goods that are imported into the United States each year. That is mostly consumer goods. And if there's a 10% tariff that's affixed to those three imports, that's going to translate to $300 billion of additional monies. On a per household basis, that's about $2,300. So that would be quite significant. The retail sector, by and large, imports quite a bit of goods from the overseas, especially on the discretionary side. So who's going to be most impacted? It'll be certain subsectors like consumer electronics, home furnishings. That would put Best Buy, Williams-Sonoma in the crosshairs of tariffs. On the other hand, the grocery sector does not import a good portion of its goods. Those retailers that have a significant amount of scale, like Walmart and Target and Costco, could also push back on vendors to better navigate through a tariff situation. But you are right that this is fraught with risk for the retail sector, and it's something to consider as you're putting money to work in this space.
You actually drilled down in terms of the percentage of cost of goods sold that could be exposed to higher tariffs by stock. And so Five Below, Best Buy, Wayfair, 40 to 60% of the cost of goods sold at those three retailers are from China. What have they learned? What have the ones most exposed learned from past hikes in tariffs and also the supply chain disruptions that we saw during the pandemic?
The last few years have been quite lesson-filled for retailers, not only because of the tariffs that were implemented in the late 2010s, but you're absolutely right, also the supply chain challenges. What the retail sector has learned is to be flexible. Think about shifting around sources of procurement from one country to another. Also, the retail sector has learned about re-engineering product to make it less expensive. So instead of passing along a price increase, the sector can simply lower the cost without having to change the price. And then finally, all else fails, pricing is a lever that would need to be used as a way to navigate through that type of scenario.
In terms of the impact, though, you're outlining the overall impact on the consumer. Does it make you think about how the consumer will be able to spend at other retailers that may not even have goods from China, but will have less money to spend because they are paying more in tariffs on goods from China elsewhere?
Yeah, Melissa, it's a great point. There are second and third order effects of this type of trade policy, not only because it's going to pressure discretionary spending power for the consumer, but if price increases are passed along, that would likely keep inflation elevated, which would also mean that interest rates are going to be higher for longer. So there are a host of factors, a number of dimensions that need to be explored. The bottom line is that this is going to be a complicated issue in the event that it happens for the retail sector. And we think it's important to consider it now. It is starting to be talked about in the investment debate on many of these stocks, and in some cases being priced in, and to an extent that it's being priced in to a great degree, that has created an opportunity. I would highlight a stock like Dollar Tree, which sells a good amount of its products that are sourced from overseas, but now trades at a very inexpensive multiple. And so to the extent the risk is excessively priced in, that could create an opportunity.